In today's video, I want to share with you my exit strategy for silver, specifically, when I'm planning to sell and why. But before I dive into that, I just want to say congratulations. Seriously, congratulations to everyone who made incredible gains on silver over this past year. Ever since I made that video about 7 months ago, the price of silver has nearly tripled. And I'm not exaggerating when I tell you, people have been messaging me with stories that honestly make all the research and content creation worth it. They're telling me that the money they made from silver was enough to completely pay off their credit card debt and finally get out of that suffocating hole. Others made enough to wipe out their student loans entirely, or pay off their car loans so they now own their vehicle free and clear. Some people have told me they made enough money from silver that they now feel genuinely comfortable in retirement for the first time in years. To all of you, I say congratulations from the bottom of my heart. I'm so happy this worked out for you. Now, before we go any further, I want to say something important. If you want to sell some or all of your silver right now and lock in your profits, I completely understand. I think that's absolutely fine, and nobody should judge you for it. Everyone's circumstances and financial objectives are different. There's nothing wrong with taking profits and securing your gains. Don't let anyone tell you otherwise or make you feel bad about it. But in today's video, I'm going to tell you exactly what I'm doing with my silver position and the reasoning behind my decisions. Let me give you a quick recap of what happened, because it ties directly into where we're going from here. I made a video about 7 months ago where I laid out my detailed case, backed by research, explaining why I was buying silver. Take a look at this 5-year chart of silver prices. When I released that video, silver was trading at $33 per troy ounce. Today, at the time I'm recording this, silver is hovering around $90 per troy ounce. That's an absolutely massive move. Now, I've read some comments from people saying, "Brian, you didn't give us enough warning time to buy silver. I was saving up money to make a purchase and missed the opportunity." But actually, that's not quite accurate, and here's why. Back in 2024, I made a video called The Great Melt-Up, where I explained that the stock market was going to surge to record highs because of what the Federal Reserve and the government were doing with monetary policy. It's a 10-minute video, and at exactly 9 minutes and 42 seconds into that video, I explicitly said that you should buy silver. I didn't say, "Oh, maybe you should think about buying silver, or silver might be interesting." No, I said you should buy silver. Period. And I actually said the same thing back in 2023 as well. Anyone can go back and confirm that for themselves. So now, here's my exit strategy, and this is crucial to understand if you want to know when to sell your silver position. In order to know when to sell your silver, you need to stop pricing it in dollars and start pricing it in gold. This is called the gold-to-silver ratio, or GSR for short. You're simply comparing how cheap or expensive silver is relative to gold at any given moment. Let me give you an example of how this works. If the price of 1 ounce of gold is $3,300 and the price of 1 ounce of silver is $33, you take the price of gold as the numerator and the price of silver as the denominator, then you divide. It's very straightforward math. In this example, the GSR would be 100. Essentially, the gold-to-silver ratio is telling you whether silver is cheap or expensive compared to gold at that particular moment in time. Now you might be asking yourself, okay, but why are you comparing the price of silver to the price of gold rather than just comparing the price of silver to US dollars? That's a great question, and the answer is fundamental to my entire investment philosophy. Why would I measure the price of silver against the US dollar, which is a fiat currency backed by absolutely nothing? You might as well compare it against monopoly money. And listen, I'm not just ranting here. I'm telling you this so you can understand the logic behind my decision-making process. You see, if you want to analyze historical data to determine whether silver is genuinely cheap or expensive, I have no choice but to compare silver to gold, not silver to US dollars. Because if you ask me, is silver cheap or expensive historically speaking, adjusted for inflation? The honest answer is that nobody knows exactly. Why? Because what inflation rate are you using in your historical analysis? We simply don't know. Nobody knows the real historical rate of inflation over the past 30 years, 50 years, or longer. The inflation rate reported in the CPI reports provided by governments is, quite frankly, a complete fabrication. It's often referred to as the CPI lie. So basically, what I'm saying is that I want precise, factual, verifiable data for my historical analysis to determine whether silver is cheap or expensive. And the gold-to-silver ratio gives me that. Here's what the gold-to-silver ratio has looked like over the past 30 years. When the GSR is in the 60 to 80 range, historically speaking, that's considered normal. Silver doesn't look particularly cheap or expensive relative to gold at those levels. And if you look at the chart, you'll notice it fluctuates constantly. It goes up and down in cycles. The investment theme is beautifully simple: buy low, sell high, make a lot of money, and enjoy your life. When I made that video last year about buying silver, here's what I saw. The GSR was above 100. And that's exactly why I said this was an asymmetric bet. The risk-to-reward profile was so dramatically lopsided in our favor that it was almost too good to be true. In my video from last year, I clearly stated that once the GSR falls to 50, represented by that green line on the chart, I would start selling my position. On January 14th of this year, the GSR fell slightly below 50. That was my signal. I immediately sold 25% of my silver holdings on the stock market, specifically my SLV position. And I want you to know that I notified my Patreon community immediately when I made this move. I always post what I'm planning to do before I actually do it, so the community can make their own informed decisions. So right now, we are 25% out of our original position in SLV. We've locked in those substantial gains, and here's what's beautiful about it. Because the position nearly tripled in value, by selling just 25% of it, we've almost completely recouped our original investment amount. That means the remaining 75% of our silver position is essentially a free roll at this point. We're playing with house money. Now, if the GSR continues to fall further below 50, I'm going to continue gradually offloading more of my position in increments. Conversely, if the GSR rises back up to a certain threshold, I'll consider buying back that silver and rebuilding the position. This is a disciplined, systematic approach based on relative value, not emotion. Now I want to clarify some extremely important points because I know there's going to be confusion, and I've already been getting questions about this. The first thing people are asking is, but won't silver just keep going up? Why sell now? Listen, I am not selling because I think silver is going to crash tomorrow or next week. That's not my reasoning at all. I'm in the process of systematically selling because my original investment thesis has partially played out, and because relative values matter enormously in investing. What I mean is this: silver has already outperformed dramatically. Volatility is increasing substantially. And most importantly, the risk is no longer asymmetrically in our favor the way it was when the GSR was above 100. Historically, when the gold-to-silver ratio compresses quickly like we've just seen, silver often overshoots to the upside and then underperforms gold in the following phase of the cycle. That doesn't necessarily mean silver crashes in dollar terms. It just means that gold tends to become the better vehicle for preserving and growing wealth during that next phase. The second thing you absolutely must understand is that gold and silver generally move together in the same direction. Right now, as I told you, the gold-to-silver ratio is sitting at 50. But here's what's crucial: if the price of gold doubles from here and the price of silver also doubles, the GSR is still going to remain at 50. The ratio hasn't changed even though both metals went up substantially in dollar terms. So maybe silver does eventually hit $100 per ounce, or $150, or even $300. That's entirely possible. But if the GSR doesn't continue falling, if it stays around 50 or starts rising, I may not sell my remaining silver holdings. I want to be crystal clear about this. I am not going to sell based on reaching some arbitrary dollar price target. I'm going to sell using the GSR as my primary indicator of relative value, which is exactly why I cannot tell you to sell at X amount of dollars. And that's precisely what I said in my original video when I laid out this strategy. I also want to tell you something about the buy and hold strategy. It sounds so simple and easy, right? Just buy something and hold it without worrying. But it's not actually as easy as it sounds to execute in real life. People get genuinely uncomfortable when they're sitting on large, unrealized gains. The psychological pressure is intense. I know a lot of people holding silver got extremely nervous when it hit $50 per troy ounce, then $60, then $80, and beyond. They were sweating, wondering if they should sell and lock in gains before it all disappeared. But I didn't get nervous, and you want to know why? Because I had set my target based on the GSR, not on some emotional dollar figure. I had a plan, I trusted the historical data, and I stuck to the plan. That's the power of having a systematic, data-driven approach, rather than making emotional decisions based on fear or greed. The third critical point is that you must stay invested, especially in this type of economic environment. That's just my opinion, but I believe it strongly. Yes, I sold 25% of my silver position. But what I'm doing is a rotation, not a liquidation. There's a massive difference. I am staying fully invested in real assets. I'm simply selling some silver and reallocating the capital into other opportunities. I am absolutely not going to sell my silver, sit in cash, and hope and wait around for some market crash that may never materialize. I'm telling you right now, we are in the middle of what I call the great melt-up. The government keeps telling us that the purchasing power of our dollars is being devalued at a rate of 2.7% per year, according to their official inflation statistics. I call complete BS on that. It's not 2.7%. Who are they kidding? If I stick my cash into an interest-bearing savings account and I earn 3.5% interest, I'm still losing money to real inflation, and I absolutely do not want to lose money through inaction. Can the markets crash? Sure, it's always possible. But then again, they may just keep grinding higher and higher. The Federal Reserve is printing money aggressively. They're lowering interest rates. The liquidity spigot is wide open. Why on earth should I fight the Fed? All I know is that if I'm a long-term investor and I stay invested in real assets, market prices are going to keep rising over time thanks to financial asset inflation. That's just how the system works. The fourth important point is dollar cost averaging, and this applies to both buying and selling. When I buy a stock or take a position in any asset, I like to dollar cost average in. I typically do this in about 2 to 4 increments, generally around 3 batches. Let me give you an example of how this works. If silver is trading at $33 per ounce and I like the setup, I'll buy my first batch. If silver then drops to $30 per ounce, I'll buy some more. If it drops further to $27 per ounce, I'll buy my third batch. By doing this, I know I'm not going to get the absolute best price at the perfect bottom. But I also know I'm not going to get the worst price either. I'm just interested in getting it generally correct. I'm not trying to time the market perfectly and stress myself out about catching the exact low tick. That's a fool's errand that will drive you crazy. It's going to be exactly the same approach when I'm selling. I want to sell in increments. I want to dollar cost average out of my position. So I know I'm not going to get the absolute best price at the very top. But I also know I'm not going to get a terrible price by holding too long. I'm just trying to smooth out the volatility and get it generally correct. That's what I'm doing by already offloading 25% of my position. I still have 75% remaining to potentially sell as conditions warrant. Number 5, and this is really important, what about my physical silver? In addition to the silver that I own on the stock market through vehicles like SLV, I also own physical silver, actual bars and coins that I personally possess. Now this is critical to understand. I am not selling my physical silver yet. My rule is beautifully simple and crystal clear. Paper silver gets sold first, physical silver gets sold last. If I eventually do sell my physical silver holdings, it will only be after I'm completely out of all paper positions on the stock market. And even if those circumstances arise where I'm selling physical silver, I'll probably keep some of it anyway, just in case the country goes to hell faster than my timeline currently predicts. Physical silver is my ultimate insurance policy against complete system failure. Number 6. Would I buy silver again in the future? And my answer is absolutely yes, without hesitation. If the gold to silver ratio justifies it and we get back to levels where silver is genuinely cheap relative to gold, I would absolutely rebuild my position. This is not an emotional attachment to silver or some romantic notion about precious metals. This is pure capital allocation based on value and opportunity. When the math works and the risk-reward is favorable, I'll be back in. Now, I want to share with you my final thoughts on this entire situation, and I want to be absolutely clear so there's no confusion. I am still extremely bullish on precious metals overall. I am still actively protecting my wealth against ongoing currency debasement and the devaluation of fiat money. And I am still strategically positioned for long-term monetary system changes that I believe are inevitable given current fiscal and monetary policies. What I'm doing right now is simply reducing portfolio volatility, locking in asymmetric gains that exceeded my initial expectations, and repositioning capital for the next phase of the cycle. That's not a bearish stance. That's discipline. That's risk management. That's smart investing. There's a huge difference between being bearish on an asset class and taking profits on a position that's performed exceptionally well. Think about it this way. If you bought something at $33 and it went to $90, nearly tripling your money, is it bearish to take some profits off the table? Of course not. It's prudent. It's exactly what professional investors do. They scale into positions when opportunities are compelling, and they scale out when risk-reward becomes less favorable. Retail investors often do the opposite. They buy after big run-ups and sell in panic during crashes. Don't be that person. The key to successful investing isn't just about picking the right assets. It's about position sizing, it's about entry timing, it's about having a plan for exits, and it's about managing risk throughout the entire life cycle of an investment. Anyone can get lucky and buy something that goes up. The real skill is in managing that position intelligently as conditions evolve. I also want to emphasize that markets don't move in straight lines. Nothing goes up forever without corrections, consolidations, and periods where other assets outperform. The gold-to-silver ratio gives me a framework for understanding when silver is likely to outperform, when the ratio is high, and when gold might be the better horse to ride, when the ratio compresses to lower levels. This kind of relative value analysis has worked throughout history, and I have no reason to believe it won't continue working going forward. One more thing I want to address. Some people might be thinking, but Brian, what if you're wrong? What if silver just keeps rocketing higher and you sold too early? And you know what? That's entirely possible. I could be leaving significant gains on the table. But here's the thing, I'm completely okay with that possibility. I'd rather take substantial profits and potentially miss out on some additional upside than hold too long and watch my gains evaporate. That's just my personal risk tolerance and investment philosophy. Perfect is the enemy of good in investing. If you're constantly trying to squeeze every last penny out of every trade, you'll drive yourself insane and you'll often end up making worse decisions. I'm aiming for consistently good decisions that compound over time, not perfect decisions that are impossible to execute in reality. And here's something else to consider. The money I'm taking out of silver isn't disappearing. It's being redeployed into other opportunities that I believe offer compelling risk-reward profiles at current levels. Maybe that's adding to gold positions. Maybe it's select stocks in undervalued sectors. Maybe it's other real assets. The point is, I'm staying invested and staying active. I'm not retreating to cash and hoping for the best. The environment we're in right now, with massive government deficits, ongoing money printing, falling interest rates, and weakening currency, is extraordinarily favorable for real assets in general. The question isn't whether to be invested, it's what to be invested in at any given time based on relative valuations and opportunity. I want to end by extending an invitation. Come visit my Patreon site to see in real time what I'm doing with gold, silver, stocks, and my overall portfolio allocation. It's become an incredible place to learn from each other, ask detailed questions and get thoughtful answers, stay ahead of market developments, and ultimately make better investment decisions. The community we've built there is supportive, informed, and genuinely helpful. We share research, we discuss strategies, we help each other avoid mistakes and identify opportunities. If you found this breakdown valuable and you want to continue following my investment journey with complete transparency about what I'm buying, selling, and why, I'd love to have you join us. The link is in the description below. Remember, successful investing isn't about being right 100% of the time. It's about having a systematic approach, managing risk intelligently, taking profits when appropriate, and staying disciplined even when emotions are running high. The gold-to-silver ratio gives me that systematic framework for silver specifically, removing emotion from the equation and replacing it with objective historical data. Thank you so much for watching, for your support of this channel, and for being part of this community. Whether you decide to hold your silver, sell it, or take a middle approach like I'm doing, I wish you nothing but success. Make decisions based on your own circumstances, your own risk tolerance, and your own financial goals. Don't blindly follow anyone, including me. Do your own research, understand the reasoning, and make informed decisions. Take care, stay disciplined, and I'll see you in the next video.